Now, wait, everyone. Yeah. Now, okay. Are you able to hear me? Are you able to hear me properly? Hello. Now audible? Yeah. Chalo. Yeah. Chalo. Let's start with today's topic now. See here, today's topic is exchange rates. Now, today's topic means this topic will go on for around 3 4 days next. It's a very big topic and it's a base of your BFM. Module A's base is this topic. It will go for around 1 week approximately. Okay, let's start. Today we'll be doing the theory. From tomorrow or day after tomorrow, we'll be doing the numericals. Okay, today is the first lecture. Okay, yeah. Chalo. What are the factors determining exchange rates? Now, firstly, everyone pay attention. Huh? What are the factors determining exchange rates? Firstly, what is exchange rate? Firstly, you tell me what is exchange rate. See here, understand the basic. Exchange happens when there are two commodities. See here, whenever you buy vegetables from the market or whenever you buy anything from the shop, then the exchange happens. You take the goods, you give the money. The exchange happens, right? When there are two different commodities, only then exchange will happen. Got it? You can't exchange gold with gold. Suppose if I gave you 1000 rupees, you give me 1000 rupees, what's the use of this exchange? No use, right? So exchange will happen when there are two commodities. Remember the basics. Okay. So now coming to our BFM topic, when will exchange happen? When there are two currencies. Currencies. Remember, currency is also a commodity. Currency is also a commodity. So when there are two commodities, only then exchange will happen. Otherwise, exchange will not happen. Rupee to rupee exchange, no logic. Dollar to dollar exchange, no logic. Dollar to rupee exchange, there is a logic, right? So what are the reasons? Firstly, there are two types of reasons. One is long term, second is short term. Long and short. What is long term? Long term means, okay, I'll ask you a few questions. I'll clarify this point about long term. Make in India. Make in India. Okay. Second, all the mobiles are now made in India, almost all of them. Cars are made in India. What is this logic? These are the long term reasons for foreign exchange. For growing means growing the strength of your dollar rupee. So long term reasons are always called as fundamental reasons. What are fundamental reasons? Fundamental means those which will make the effect on the longer run but permanent effect. Now we are in fifth position. We are planning to go to third position, right? If we go to third position, then we will be one of the biggest economies. In fact, we are right now also. At that time, we will be one of the, after China and USA, will be the biggest economy by then. And who knows by then? USA might collapse. Who knows by then? China might collapse. Anything can happen. You don't know, right? So, long term reasons are basically fundamental. So, what are these fundamental reasons? Fundamental reasons are number one, look at this balance of payment. What is balance of payment? Okay. Now, everyone pay attention. What is balance of payment? Basically, there are two accounts for any country. Two accounts. Which any businessman also. Forget this country. Let's talk about our normal businessman. Every businessman will have two accounts. One is saving account, second is current account. Saving account is for his own money, own expenses. Current account is for the business, right? Similarly, country also has two accounts: current account and saving account. Okay. So what is current account? Current account in case of country is called as balance of trade. Current account in case of country is called as balance of trade, and saving account in case of country is called as balance of payment. Understand this. Current account is balance of trade. Saving account is balance of payment. Okay. Net remember, suppose if you are a businessman, let's say everyone, you all guys are business persons. Let's say you are doing your business. You sell something, you buy something, and whatever is the net effect after the year end. Let's say you have a profit of 10 lakhs. Okay. You have a profit of 10 lakhs. Now you tell me, no, Ganesh, you are right, but I have not answered your question because difference between export and import, I'll answer it later. Right now, it's not required. Okay. So, where were we? Yeah. So the point is the current account. Suppose if you are a business person, and what happens, your uh, net effect means in current account you have, let's say, 10 lakh profit. So this 10 lakh will be transferred where? Suppose if you are in business, everyone pay attention. You all guys are in business. Let's say you are doing business. In current account you have excess 10 lakh rupees. Where will you transfer those 10 lakh rupees? After you, means March 31st. Where will you transfer it? Or will you keep it in current account only? What do you guys will do? Will you transfer the money or keep it? Where will you transfer it? You will transfer the money where? Into a savings account, capital account. What is a capital account? Capital account means basically savings account. Okay. Capital account means net it's savings account. Always remember, capital account is a savings account because after all it's for individual. So where will you transfer this net? You will transfer it to balance of payment. Similarly, country also does the same thing. Whatever is the net effect of balance of trade, it is transferred to balance of payment in the end. So that's why balance of payment is important. In balance of payment, what do we have? We have various types of funds other than business. Other than business, NRIs transferring the funds to our country, balance of payment. ECB, external commercial borrowing, balance of payment. FDI, balance of payment. FPI, foreign portfolio investment, balance of payment. So anything which is not a business, is transferred to balance of payment. Okay. So generally a surplus leads to a stronger currency while deficit weakens the currency. Isn't it simple? If you have a positive balance of payment, then you will have a stronger currency. Right? Second, economic growth rate. Right now we are at around what? We are expected to grow at around 6.5 to 7% approximately. We are the only country in the world which will be growing at this rate. Only country means considering the big countries. I'm not considering any smaller country. Okay. So in the big countries, big economies, we are the only economy which is growing at around 6.5, 7 or even 7.5. Okay. So economic growth rate, the more it is, the better it is for the country. Fiscal policy. Now fiscal and monetary policy, kindly remember the budget which we had just now, that's a part of fiscal policy. Fiscal policy is always given by the government, finance ministry. Monetary policy is always given by RBI. Okay. RBI policy will always be supportive to fiscal policy. Which is the main policy? Is fiscal policy main or is monetary policy main? Okay, you guys, let me check. What do you say? Is fiscal policy main important or is monetary policy important? Important is always fiscal policy. Always. Okay. Important is always fiscal policy. Fiscal. It is always monetary policy needs to be the to be supportive to the this fiscal policy. Okay. So fiscal policy means what? It will relate to the taxes. Government will always be focusing on taxes. An expansionary policy means lower the taxes can lead to a high economic growth, right? So if we have expansionary policy, it means government is reducing the taxes. Now there are, look at this, two parts over here. Expansionary policy in fiscal is lower taxes, and expansionary policy in monetary is monetary, lowering the CRR rate, CRR and repo. Okay. So whenever RBI wants to go for expansion, it will go for reduction in CRR and repo. Whenever government wants to go for expansion, it will go for reduction in taxes. Okay, got it? So these are the basic fundamental reasons. Let me see if others are also there. There are others also. Interest rates. Firstly, before that, see this. This table is very important for you. Balance of trade, balance of payment. Balance of trade means export import. Now what is export and what is import? Export means whatever you sell outside, that is export. Ganesh, kindly pay attention. Whatever you sell outside, that is export. And import means whatever you buy from outside, that is import. Okay? Simple, very simple. Suppose in export, what do you do? Okay? Suppose if your exports are bigger, greater. Okay? Suppose if your exports are greater, then what will happen? You will have a stronger currency. If your exports are greater, then you'll have a stronger currency. Okay? And if your exports are lesser and imports are bigger, then you'll have a weaker currency. Okay? Got it, everyone? Chalo. So now coming back to this, you wanted something else? Who was asking? One second, yeah. So, who was asking? You are asking something? Reason. Reason means Ravi Narayan. You are asking for reason? Reason means what? Monetary policy expansion. If you have lower taxes, understand this, everyone. If you have lower taxes, people will do more business. So that will go for more expansion, more GDP. If you have lower CRR and lower repo rate, people will take more loans. So once they take more loans, they'll be doing further business. So that will again lead to expansion. Okay. Next. Remember, there are basically three policies: EXIM, fiscal, and monetary. EXIM is always given by commerce industry, commerce. Okay. Fiscal is given by finance, and monetary is given by RBI. If you want to expand in fiscal, cut the taxes. If you want to expand in monetary, cut repo and CRR. Got it? Interest rates. High domestic interest rates tend to attract overseas capital. Thus, the currency appreciates in the short term. Now, this is a question, exam question for you. In exam, they'll ask you this question, and generally they ask you, if there are high domestic interest rates, what will happen? It will attract more overseas capital. People will try to invest more in your country because you are giving higher rates. Simple. It's like the FD. Okay. If you have more rates in your bank for FD, people will invest more in your bank, right? So high domestic rates will give you more capital. Thus, the currency will appreciate in the short term. Why will currency appreciate? How will the currency appreciate? Understand this. First, remember BFM is mainly understanding. It's not learning. Okay. If people invest more, what will they invest in? Look at this, huh? Everyone pay attention. Why will your currency grow if your interest rates are higher? So people will invest dollar seeds. The basic logic is between dollar and rupees. Okay. So if your interest rates are higher, more dollars will come in. More dollars will come in. So what will happen? Dollars are more, rupee is less. So the value of supply of dollar will rise. So more supply of dollar will come in. Why? Because your interest rates are higher. So more supply of dollar is there. So value of this supply of demand of dollar will decrease in that case. So that's why dollar will decrease. If dollar value decreases, rupee value will increase. Rupee will rise. So that is mentioned over here. High domestic interest rate tend to attract overseas capital. Thus, currency appreciates in the short term. It's all the game between demand and supply. More supply, less demand for dollar. Okay, and always remember in forex, if one currency reduces, the other currency increases. Okay. In the longer term, however, higher interest rate slows down the economy. Now that is also true. If I increase the interest rates, if RBI increases the interest rate, what do you mean by interest rate? Interest rate means we are talking of repo and CRR. Kindly remember, we are talking of repo and CRR. So if tomorrow RBI increases the repo rate or increases the this CRR, what will happen? In that case, banks will have to deposit more money with RBI in CRR. So bank will give lesser loans. So if bank will give lesser loans, people will have lesser money in the market. Okay, people will have lesser money, so they will invest less in the businesses. So GDP will come down. So see this, I have given it over here in the bottom. If interest rates are higher, what happens? See this, interest rates higher, repo and CR are higher, inflation will go down. Kindly remember this. Inflation goes down if interest rates are higher. So this is good. GDP goes down, that is bad. Okay, and bond prices go down, that is also bad. So these four elements you must by heart throughout your life. If interest rates are up, inflation will be down, GDP will be down, bond prices will be down. All the three will be down. One is good, two are bad. Right? So coming back. So higher interest rate slows down the economy and it will weaken your GDP. Political issues means if the political instability is there, this country is having huge political instability. For example, let's take this example. Which example? Can you give me some example now? Take our neighbors, Pakistan. What is happening in Pakistan? Look at the political stability. Every 6 months, 7 months, there is an election. Sri Lanka. What is happening in Sri Lanka? Same thing. Okay. Even now, why that? Why to go for Pakistan and such low countries? Think of UK, United Kingdom. What is happening in UK? England, Angrez, all those who ruled. What is happening with them now? Every 1 year they are getting elections. Every 1 year. Political instability. Every time new government comes. Political instability will definitely reduce the country's overall stature and it will reduce the growth rate of that country. And political stability will lead to the economic stability and hence the steady currency. Okay, simple rule, isn't it? Everyone wants politically stable country. Okay, next. Now we come to short term reasons, technical. See here, first one were fundamentals, long term. Now short term. Short term reasons means what? Government controls. What do you mean by government controls? Government reduces. Yeah, China. Very good. China is having a huge problem, I'll tell you. The problems of China will come up the day their president is gone. At that time, they will prop up like anything. There are huge problems in China which are not coming out because the media is closed. So let's not discuss into that. So let's talk about the short term reasons now, technical reasons. Government controls. Now, what is government control? I'll tell you an example of government control. A few years back, Chinese government, what did they do? One night they declared, understand this, one night they declared that their yuan will be devalued. Yuan is their currency. Yuan will be devalued, okay, by almost 10 to 15%. One night, single night. And what happened because of that? The whole economy got down. There was a huge turmoil in the market. So this is known as government controls. In our country, Bharat, we don't do this. Okay? In our country, government doesn't interfere in the rates of dollars unless it is very serious emergency. Otherwise, we don't interfere. Ours is a perfect market. In perfect market, what happens? Yeah. No, that is different. Ganesh, just wait for some time. Huh? Don't discuss the issues which are not related to our topic. Okay? Notebandi is a totally different topic. Okay? That has nothing to do with your Forex. So just wait for some time. Okay? So government controls, remember, demand and supply. Okay? This demand and supply means basically what happens in our country, Bharat, we don't do these things. That we our government doesn't interfere directly in the market. See, here there are two types of controls. Let me come to this point. There are two types of controls. One is direct, second is indirect. Direct control by the government is always bad, always. Indirect control by the government is okay. That is good. Every country does this. But direct control by the government, very bad. This happens in some countries which are almost, you can say, autocratic. Chinese, autocratic. Saudi, Middle East countries, autocratic. They can do anything. Indirect means like Bharat, USA, UK. These are all indirect controls. So government controls can lead to unrealistic value of the currency, resulting in the violent exchange rates. Violent exchange rates means one day government will say I'm increasing the dollar rate, next day government will say I'm decreasing it. So this will lead to violent exchange rates. Freedom or restriction on capital movement can affect exchange rate to a larger extent. What do you mean by freedom or restriction on capital movement? What do you mean by this line? Freedom or restriction? Understand the concept of freedom. In our country, Bharat, kindly note, are rupees fully convertible or partially convertible? Have you read about this? What does a rupee do? Are rupees fully convertible or partially convertible? Yeah, got it? It is partially convertible. But partially convertible in one. Here, one thing you all guys make it clear in your minds. In balance of trade, BOT, are rupees fully convertible. Here, BOT, BOT, it is fully convertible. Fully convertible. Okay, convert. In balance of payment, BOP, we have partially convertible. Partial convert. Okay, convert. You all might have heard about this fully convertible, partial convertible. See here, you might have heard this word fully convertible, partially convertible. What do you mean by this? But we only hear about it partially, fully, but we don't know the meaning of this. What is the meaning of this? Understand the meaning of this fully convertible and partially convertible. It means that suppose if tomorrow, let's say tomorrow, I get a order from USA. I get a export order from USA for let's say 1 crore USD. 1 crore USD I get a order. So can I pursue that order or can I do that order? Obviously yes. Government won't say anything in that case. Government will say you do that order, sell it to them and get 1 crore dollars. That's simple. Reverse case. Reverse case. Okay. Yeah, I'll come to that. Reverse case. Suppose if I have to buy some machinery from USA for $1 crore, machinery from USA for $1 crore. I'm having that. Here, let's say I'm Reliance. I'm having huge money. I'm having that money. So will the government restrict me or stop me? That no. You can't buy $1 crore machine. It can't. It will never. It will allow me. Why? Because it's business. In our country, balance of trade is fully convertible. I can pursue any order, import or export. But balance of payment is partially convertible. Now, what does this mean? Suppose if tomorrow I want to transfer, let's say, 10 lakh dollars to my relative in USA. I want to transfer. I'm having money. See here, I'm having money. I'm having that money. It's my money. And I want to transfer 10 lakh dollars to my relative in USA. Can I do it like that only? Or will I have to take RBI permission? In that case, I'll have to take RBI permission because RBI allows only 2,50,000 under LRS, right? Liberalized remittance scheme. So this is known as partial convertibility. Partial convertibility means in balance of payment other than business, you cannot transfer the funds outside. Of course, you can get the funds. But that also subject to regulations. Otherwise, you might have seen all those NGOs. All these NGOs, we are reading the newspaper regularly. 300 NGOs banned, 1000 NGOs banned, right? What is that? That is under balance of payment. That's why they are banning it. Okay. Next, capital tends to move from lower yielding to higher yielding currencies. Just now we saw it. The one country which is having higher rate of interest will always be having higher capital. People will tend to invest more. But there is a disclaimer to this. Tomorrow, if let's say Pakistan says my rate of interest I will be giving is, let's say, 9% or 8% on my bonds. 8%. Now, all the countries, what are we giving? We are giving it around repo rate, 6.5 roughly. We are giving it around 6.5. Tomorrow, if Pakistan says we'll be giving you 9%, will all the countries rush to Pakistan? No. Why? Because it's not only important what rates you are giving, it's also important what your credibility is. Everyone knows. You invest and neither this 9% you will get it, neither your principal you will get it. Everything is gone. Right? So that's why credibility is important. Tomorrow Sri Lanka says, oh, invest in us, we'll give you the money back. 9%. Nobody will say. People will kick them out. Same thing, all our neighbors. You call it, you have it. What that? Bangladesh, Pakistan, Sri Lanka, Nepal, even Bhutan. Bhutan is out of question. Okay? Yeah. No surety at maturity. Correct. Very good. What is this? Ananta. Barwakis. What is this? Can you please explain balance of payment once again with simple example? Balance of payment means here anything which is not related to business. Which is not related to business. Suppose if you are taking a loan from USA, suppose let's say you are having a relative in USA. Okay, you are having a relative in USA. That relative gives you a loan of let's say $1 lakh. So that will come under balance of payment. Okay, but if you sell something to that your relative, anything, your drawing, your art, your anything, and then you get $1 lakh. So that will come under balance of trade. So balance of payment with simple example means whenever you sell something, it comes under balance of trade. Whenever you get the money without selling something, that comes under balance of payment. Got it? Ananta? Okay. Move on. Speculative forces. Speculative forces means what? These are called as brokers. Brokers. All of us have brokers in between, right? Whenever you buy a plot also, in your life also, you might be buying certain plots or certain flats, right? So whenever we buy any plot or flat, we generally have those brokers in between. What do these brokers tell you? These brokers tell you, sir, buy this plot right now. After 1 year, there is a highway going on near this plot. So the rate of this plot will go huge, right? What does this mean? It means speculative forces, speculation. So brokers or speculative forces will always play a major role in short term. Kindly remember, it's all short term. Okay. So play a major effect on the exchange rates in an expectation that the currency will be devalued. Speculator will short sell the currency for buying it at a cheaper rate at a later date. Okay. So what is this short selling? I won't go into details over here now. We'll be coming to it later. Short sell means sell now, buy later. Sell now, buy later. That is called as short selling. There are two positions. Always remember. One is long, second is short. Long means what? You buy now and then you sell it when the rate goes higher. So that is known as long position. And short position is reverse. You sell now. Let's see this example I have given. Let's say Reliance was at 2600 today, and I am expecting that the Reliance will go down to 2400 in 2 days. Okay, I am expecting Reliance to go down to 2400 in 2 days. So what will I do? I'm not having Reliance right now. I'm not having this share. But then also I'll sell 100 shares of Reliance. Okay, 100 shares of Reliance. And after 2 days, when it goes to 2400, I'll buy these 100 shares again and square it off. This is called as squaring. So net what have I done? I've earned 200 rupees in this. 200 into 100. So 20,000 I have earned. So this is known as short selling. So speculative forces means whenever anyone speculates something about the rates, that will have an effect. Now you guys fill in the blanks. The term foreign exchange is used to denote dash as well as the dash of one currency into another. So it is used to denote what? Foreign exchange means either the currency itself, foreign exchange currency. Okay. The term foreign exchange actually means foreign currency as well as the exchange of one currency into another. It is foreign currency over here and exchange of one currency into another. The exchange rates of major currencies fluctuate every dash seconds. What is the answer for this? Do you know this? This was there in your JAIIB also. 4 seconds, correct. Fluctuates every 4 seconds. Okay. Forex markets are dynamic and round the clock markets. True or false? Everyone, true or false? Forex markets are dynamic and round the clock markets. True or false? True. Correct? It is true. Okay, next one. Forex markets are not affected by government policies. Second one. I want the answer for second one now. Second one. Forex markets are not affected by these. Okay. So it is false. Correct. First one is true. Second one is false. Third one. Third one. Now third one. A large part of total global forex turnover results from global commodity trade. Large part of total global turnover, forex turnover, results from total commodities trade. Global commodities trade. Is it true or false? So the answer is false over here. Kindly remember, it's false. It's not true. Total commodity trade is a part of this, very small part. Okay? It's not a large part in this. What is the large part? Large part is your forex transfer, dollars. Okay? So let's move on. Most of the forex deals are done on spot basis. Meaning thereby that the delivery of the funds takes place on the second working day. Now this you have done it in JIIB also. Again we'll repeat it fast. Okay, spot means what? Second working day. Okay, how many types of transactions are there? Cash ready, tom, spot, and forward, and future. cash ready, term, spot, forward and future. These are the 5 types of transactions. Cash ready means settlement is done on the same day. Okay, cash ready, settlement is done on the same day. Term means next working day. Remember, next working day. Spot means next to next working day. We call it second working day. Second, okay. Forward means any day after spot. Okay. Future is organized forward. Organized forward means, okay. Kindly understand this. Forward and future. Kindly understand the difference between forward and future. Okay. There's a slight difference. Otherwise, both are same. Forward is a two-party system. Two-party. There are only two parties over here: buyer and seller. Future, there are three parties: buyer, seller, and exchange. Somebody in between. Okay. So future, there are three parties: buyer, seller, and exchange. Forward, there are two parties. Kindly remember this. Future is called as a organized forward. Organized. Why? Because exchange sets the rules. Okay. Suppose many of you might be buying shares, right, in the market. Many of you buy these shares, right? Do you know, whenever you buy these shares, do you know who has sold these shares? Do you know? Suppose tomorrow you buy Reliance, 10 Reliance you try to buy. Who's selling this Reliance? You don't know. NSE is not doing this. NSE, BSE doesn't do it. These are just the exchanges. We don't know the seller. Okay? Similarly, reverse case also. If you sell the shares, do you know who's going to buy it? No. Why? Because the exchange is in between. So this is known as a future market, where the exchange doesn't let the buyer and the seller meet each other. Okay? More about this later. We'll be coming to this topic whenever we deal in this module C again, or module B also. The date of delivery of funds on the date on which the exchange of currency actually takes place is referred to as value date or settlement date. So these are the two dates, means whenever the settlement takes place. Means what? It means that suppose if I give you the money today, and tomorrow let's say you will be giving me some commodity, let's say vegetables. You will be giving me vegetables tomorrow. Okay? Standardized. Ravi Kumar. Future market is standardized. So suppose tomorrow you will be giving me vegetables. Then what does it mean? It means that the settlement will be done tomorrow. Okay? Yeah, correct, Ganesh. Organized means governed by NSC. That's right. In fact, you can call the governed by the exchange, middle person. Okay? So settlement date means what? Settlement date means the day on which both the legs of the transactions are over. I give you the money, you give me the vegetables. So that is called as settlement. Okay? Forward rates are derived from spot rates and are the function of spot rate plus and forward premium or discount of the currency being quoted. Now, what do I mean by this? It's very simple. Forward rate equals to spot rate plus premium or minus discount. If it is premium, then plus. If it is discount, then minus. So forward rate equals to always spot rate plus premium or spot rate minus discount. Okay? Keep it very simple. Spot rate plus premium or spot rate minus discount. Got it? I'll remove this because this is not needed by you right now. Got it? Let me give you one example for this spot and premium. Take this. Let's say $1 spot equals to 80.2333. Everyone pay attention. The rate of dollar in spot means what? Today. Kindly understand this. Spot means today. The rate of dollar in spot is 80.23 or 33. What do you mean by this? 23 and 33. What is the difference between this? This left side is known as bid or buy. Left side is called as bid or buy. Right side is called as offer or sell. Okay, or ask also. Three names are there. Offer, sell, ask for this right side. Left side is always known as bid or buy. We generally talk in terms of buy and sell. So if I ask you buy rate means I am asking you 80.23. Okay. If I ask you sell rate, it means I am asking you 80.33. Right side is always sell, left side is always buy. Okay. Got it? So bid, buy, offer, sell, ask. Okay. Coming back. Now this is known as a spot rate. Now what about this forward rate? Forward rate means it's like this: 1 month, 2 months. Here, generally in our country, Bharat, we deal in three types of forward rates. Generally, we deal in 3 months. Generally, yeah? We can deal in higher also, but we'll deal generally in 3 months. 1 month, 2 month, 3 month. So what is this 1 month, 2 month, 3 month? 1 month, 2 month, 3 month means 1 month, 2 month, 3 month means, let's say this 1 month, 10 and 20. What do you mean by 10 and 20? It means that after 1 month, the present rate of dollar, what is the present rate of dollar? 80.23 for buy. So after 1 month, the present rate of dollar will go up by 10 paise. So it will be 80.33 after 1 month. Okay. Suppose if I ask you after 2 months, what will be the rate? Yeah. Spot means second. Okay. Second working day. Second working day. Okay. So suppose if I ask you what will be the dollar rate after 2 months. Now you guys give me what will be the dollar rate after 2 months. Buy. I want the buy rate. Buy. I want the buy rate. Dollar rate after 2 months in buy. Okay. Let me clarify this point. See here. No, it will be lesser. It won't be 80.53. It will be lesser. Let me come to this point. See here. Whenever you are having this like this, what? 10 and 20. Whenever right side is bigger, right side is bigger, we call the currencies in premium. We call the currencies in premium. When your left side is bigger, we call the currencies in discount. Discount. Okay. So what do we do in this? Whenever we have a premium currency, we add. Whenever we have a discount currency, we subtract. So coming back, if I ask you after 1 month, what will be the rate of dollar? For buy, it will be 80.23 plus 10. So it will be 80.33. Kindly note this. What will be the sell rate for dollar after 1 month? Everyone pay attention. Sell rate for dollar after 1 month. Sell rate now. Sell rate, right side. So 80.33 plus 20. So it will be 80.53. Okay. This is for 1 month. Why? Because currency is in premium. Premium. So that's why we have added both. 10 also, 20 also. Both of them I have added. Now look at the second month, 2 months. It is 30-20. So right side is smaller, left side is bigger. So currency is in discount. So I'll subtract it now. Subtract. Whenever currency is in discount, we have to subtract it. So I'll be doing 80.23 minus 30. So it will be 79.93. And here 80.33 minus 20. So it will be 80.13. Okay. Got it, everyone? Kindly note, whenever you have a premium currency, you will add it. Whenever you have a discount currency, you will subtract it. Okay. Let's do it more. Let's do some examples. Hold on. Okay. Yeah. No, it's nothing like that. Ganesh, don't have some wrong notions. Discount doesn't mean stronger currency or weaker currency. It's nothing like that. Okay. This is totally related to your daily transactions, discount and premium. So let's not get into that. So important point over here now. Uh, let's do some examples. Okay. No, it's not that which will benefit or which will not benefit. It's not that. It depends on what your position is. If you have a long position, then premium will benefit. If you have a short position, then discount will benefit, isn't it? What is premium? Rate will go higher. Okay. So if I brought, let's say, dollars, let's say I brought $1,000, then what will help me? If the rate goes up, then that will help me. So that is called as a long position. If I have sold, I'm having a short position. I've sold $1,000. Then what will help me? Then this discount will help me. Currency going down will help me, right? So it depends on what position you are having, whether you are having long or short. It depends on that. Okay. So let's do one or two more examples. In this, let's say spot rate. Okay. Spot rate is, let's say, okay. Now you give me the answer. Okay. 3 months I'll give you. 3 months. The currency is 40 and 50. Now you give me the buy and sell rate after 3 months. Give me the buy and sell rate from this only. 80.2333. Give me the buy and sell rate for this. Okay. What is the buy and sell rate? It is 50 over here. Huh? 50. What is the buy and sell rate? It will be 80.63, correct. 80.63 and 80.83, correct. 80.83. Got it? Now let's say I'll give some extra example. 4 months. It is, let's say, 70 and 60. Now give me the rates. 70 and 60. Now give me the rates. Give me the rates now. Everyone, what will be the rates now? It will be 70 and 60. It will be 79.53. Correct. The currency is in discount. Kindly note, the currency is in discount. So minus. Currency is in discount. So minus. So 79.53. And what is the second one? 80.33 minus this. So 79 point, it will be 63, na? 63 plus 60. Yeah. 63? 53 and 63? Or 73? Is it 73 or 63? 73, na? 33, 73, 73. Correct, 73. So 79.73 it will be. Okay. So 79.73. So whenever you are having the discount, kindly subtract it. 73. Okay. Got it, everyone? Chalo. Here, kindly note this again. Those who have not understood, kindly note this point very clearly. Whenever you have a right side bigger in forward, right side bigger in forward, kindly note in forward, then you say the currency is in premium. Whenever you have the left side bigger in forward, then we say the currency is in discount. Okay, got it? So 3 months in the current 3 months the currency is in premium. 4th month the currency is in discount. Okay, 4th month the currency is in discount. Got it? So rates you got it, everyone? Clear? For 3 month and 4 month. So 79.53 and 73. Got it, everyone? 80.33. What is this 33? For which month are you talking, Murugraj? Okay. So it will be cleared more. Again, watch this video. We'll be doing this numericals again. Okay. 3 month is 40-50 rate, isn't it? 40-50 means what? You have to subtract it. 80.23 minus 40. What is the answer for 80.23 minus 40? It is 80.63, no? Or 73? 63. No, 83. Acha. 80 point. What is this? 23 minus 40. 80.23 minus 40. So what is the answer? Oh, I should have done it. I shouldn't have depended on you guys. 80.23 minus 0.4. What is the answer? 80.23 minus 0.4. Right? 23 minus this 0.40. Yeah, that's right. So I've done it error over here. So it will be 79 point. Yeah. This will be subtraction now, which is this third month, na? Fourth month. 40-50. Now, what is the problem? Who is asking any issues in this, Murugraj? What is the issue for third month? Third month is 40-50 premium. So it is correct, na? 23 plus 40, 63. 33 plus 50, 83. Isn't it? Simple it is. Got it? Whenever you have the premium currency, you'll have to add it. Whenever you have a discount currency, you have to subtract it. Got it? It's correct. Not an issue. 3 months is not discount. Murugraj, kindly understand the concept. Right side is bigger, 40-50. Which is bigger? You tell me. Which is bigger? 50 is bigger or 40 is bigger? If 50 is bigger, we are in the premium currency, right? So premium is to be added. Simple. These are the basics, okay? Chalo, move on. So currency in premium, so you will be adding it. Chalo, got it? Everyone got this? Premium means right side will be bigger. Discount means left side will be bigger. That's it. Kindly follow it again. Watch this video again. This is the basic. Got it? Once you clarify this concept, then only you can go for the higher numericals. Now the numericals will be bigger. Okay? Chalo, we'll stop over here today. Okay? Let's meet again tomorrow. Bye. Telegram channel, okay, I had shared it yesterday also. I had shared it. Okay, again I'll share it. Hold on. Good night. Kindly take this Telegram channel, everyone. Chalo. Bye, everyone.